Switching banks is easy until one missed payment turns into fees. Switching bank accounts isn't hard. The danger is that money moves cleanly while payments don't. A single declined autopay can trigger late fees and even a credit hit, and overdrafts can stack fast if your old balance runs low. The mess usually comes from forgotten linked accounts, apps, utilities, transfers, and random trials. Even check deposits can stall during the changeover. The safest switch looks like two accounts running together, temporarily. A smooth switch starts with setting up the new account like you plan to rely on it tomorrow, but without shutting the old one down. Open the account, then confirm it's FDIC or NCUA insured, so your deposits have standard federal protection. Get online access working and alerts turned on before any money lands there. Activate the debit card carefully, because some banks lock purchases until you verify it. Keep both accounts open and build a cash buffer, ideally 300 to 500. Your paycheck is the anchor, so switch direct deposit first and let everything else follow. Most employers take 1 to 2 pay cycles to fully update, so keep both accounts overlapping during that window. Then move ACH autopays carefully because they pull by routing and account number and can fail silently at first. Card-based autopays are separate, so update those one by one. If you use bank bill pay, you'll need to rebuild payees. Leave a small cushion in the old account the whole time. Card payments create the most surprise because switched doesn't mean finished. Update digital wallets early so your phone taps don't fail at checkout, but expect pending charges to post later on the old card. Tips and restaurant adjustments often hit days after the swipe, and that can overdraw an almost empty account. Switch subscriptions one by one so you can see what breaks. Keep the old account open long enough for refunds to land, and watch for surprise ATM surcharges while you relearn your new network. Closing the old account is the final step, and rushing it is how people get burned. Wait 2 full cycles. Think 2 pay periods and 1 full month of bills, so delayed charges and refunds have time to surface. Turn off every autopay at the old bank and confirm you've stopped all incoming deposits, not just your paycheck. Leave a small buffer until the very end, then get written closure proof and save key records like statements and confirmations for at least a year. Give yourself 2 full billing cycles before you close the old account. Most problems show up in the delay. If you want a simple way to compare options for protecting your savings, the Smart Investor matches you to gold and gold IRA providers based on your goals and shows the real dollar cost difference over time. Free, takes about 3 minutes, and the link's in the description.